Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're diving into some eye-opening stories about the Canadian real estate market and Ontario's economy. First up, let's talk about the staggering speed at which Canadian home prices have been rising compared to income. Since 1981, real home prices have increased a whopping 163.5%, while real household incomes have only gone up by 24%. That's about 7 times the pace, Steve.
Absolutely, Janine. It's a striking disparity that highlights the growing challenge of housing affordability in Canada. It's essential for potential home buyers to remain aware of this gap because it can impact their purchasing power and long-term financial planning. The rapid increase in home prices relative to income is a clear indicator of the need for more balanced growth in the housing market.
And while we're seeing these home prices soar, Ontario's unemployment rate is also hitting some concerning levels. In May, it reached 7.9%, which is nearly a point above the national average. What's interesting, though, is that Ontario hasn't been losing jobs. In fact, it's been adding them at a brisk pace. The issue is that job creation isn't keeping up with the province's population growth. What do you make of that, Steve?
That's right, Janine. The current situation presents a significant challenge for Ontario. Even though jobs are being added, the rapid population growth is outpacing the job market's ability to absorb new workers. This could lead to increased competition for available positions and potentially slow down economic growth if not addressed. It's a situation that requires careful monitoring and strategic planning from both policymakers and businesses.
It's definitely something that affects the community on a personal level, too. With a higher unemployment rate, it can be harder for families to feel secure in their financial futures, especially if they're thinking about buying a home. The economic environment is so interconnected, and it's crucial for people to stay informed and proactive about their financial decisions.
Exactly, Janine. Understanding these dynamics can help individuals make better informed decisions, whether they're looking to buy a home, invest, or simply manage their finances more effectively. It's all about staying ahead of the curve and anticipating changes in the market.
Now let's delve into the Canadian Mortgage and Housing Corporation's insights from their 2025 Residential Mortgage Industry Report. It's always fascinating to see how these trends shape our housing market.
Indeed, Janine. The report highlights some significant shifts in borrower behavior. Canadians are moving away from the traditional 5-year fixed-rate mortgages. Instead, more people are opting for variable-rate mortgages and shorter fixed-rate terms, like 3 to 5 years. This shift seems to be driven by a belief that interest rates might not rise sharply in the near future.
That's right, Steve. It's a strategic move by borrowers, likely hoping to capitalize on lower rates. However, it comes with risks. If the interest rates do change quickly, those with variable or short-term loans could face financial strain sooner.
And it's not just about interest rates. The report also notes that the level of mortgage debt in Canada has reached about $2.3 trillion. That's a massive figure, making it one of the highest in the G7. The high debt level, coupled with economic uncertainties, poses potential vulnerabilities for the Canadian economy.
Absolutely. And with over 2 million mortgages expected to renew between 2025 and 2026, many of these were initially taken at very low rates. Even though the Bank of Canada has been cutting rates, most borrowers will likely face higher monthly payments upon renewal. This could be challenging for households already struggling with high living costs.
True, Janine. But there's a silver lining. The financial foundations of lenders are reportedly stronger than in past financial crises, which could help stabilize the market. If the overall economy performs well, lenders might be able to cushion some of these impacts.
That's reassuring to hear, Steve. It's crucial for potential home buyers and current homeowners to stay informed about these developments. Understanding these trends helps in making sound financial decisions, whether it's managing existing mortgages or planning for future purchases.
Indeed, Janine, staying ahead of these changes is key. And with that, we've wrapped up today's insights from the CMHC's 2025 Residential Mortgage Industry Report. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.